What's up, everybody? Welcome to another edition of The Good, the Bad, and the Ugly. Here with you, as always, I'm the bearded boy wonder, Dave Bartosiak, and today, my friends, it's kind of ugly. Pretty well documented throughout the end of last week. We had a couple of iron condors that got a little squirrely on us due to last Friday's price action, and I know I talked about it during the morning after live session. We're going to have another one of those tomorrow, which will be great because we'll have results from NVIDIA that we can talk about. So I'm going to go over a couple of those that already, expired last week, and we've talked about them a lot, but I thought it was important to touch on them. And we're touching on a lot of things that are happening in the market, and let's just kind of go from there. So we had a bullish call spread on AMD. We've had this for a while. Long the August 18th, 14.15 call spread for a 41-cent net debit. Max profit with AMD over 15, pretty well documented. AMD went way up, and then now it's come way back down. It's at 12.50. The spread's trading at 8 cents. Smash every AMD chip and card that you can find. I'm just kidding. But no, this was frustrating because we were up so big right away, and then it just retreated the whole time. Really no rhyme or reason to it. Not sure why people are coming in and dumping AMD here. This is a theme that we've been seeing a lot throughout the early on in earnings season here. I think it's going to tell us something about the market moving forward. So you'll notice we're going to get a little bit more bearish on some of these tilts because we're going to really need a compelling reason for a bull case and a sustained bull case on a lot of these stocks moving forward based on what this market has told us this week. So the good news is we're learning, and I'm going to talk a little bit more about what we're learning. So let's go through this here now. The iron condor on Apple, and again, talked about this on Friday. We were short the 155, basically 143 was the two levels that we needed Apple to stay in between. We got 65 cents for our troubles. So this closed basically at 156.39. So you would have lost $1.39 on the call spread part, or 74 cents overall on this trade. Now that's not that bad if you think about it. Got credited 65, you end up losing 74. Pretty good risk versus reward. So that's why this is something that you should pretty much continue to do. And we did, speaking of things we've continued to do, a bearish call spread on Tesla. So one of the few times here, short the 342.50, 345 call spread for 50-cent net credit. Max profit with Tesla under 342. Well, in this case, Tesla rallied sharply. One of the few stocks that has actually bucked the trend and rallied sharply here during this earnings season early on. And they expired with a max loss here on the call spread. So we lost $2 on this, but that's kind of what you get. So I think what I want to hammer home with people, we've talked about this a lot in the chats, but haven't talked about it here. I know a lot of you guys watch this, is that we can't take a couple of hits, 2, 3, 4, even 5 in a row if it gets to there. You can't take 5 in a row and then all of a sudden abandon your strategy, right? You're just kind of a prisoner of circumstance. Sometimes these things are spiking out and you just happen to catch the wrong side of it, okay? When it comes down to it, if you continue to apply your edge that you have over time, it's going to work out. Heading into this week, we had a huge streak going, something like 7 or 8 in a row where we were making money on things. So you got to just stick to your guns, and over time, you know that it's going to end up working out for you. So here the bearish call spread on Tesla. Tesla rallied up through, got us for the max loss. But if you think about it in the grand scheme, hey, it's only $2 anyway. So you're not losing a ton of money per spread. Now, Applied Optoelectronics, this was obviously a high-risk situation. We were long the August 4th 93.99 call spread for 240 net debit. We're really swinging for the fences. Max profit AAOI had to be over 99. We know how that happened. The bottom fell out of this thing. This one expired worthless for the max loss. But again, guys, that's why you use options to do this. So in this case, we lost $2.40 on a 93.99 call option, right? Now, had you bought 100 shares of AAOI, the thing was down to what, 65? So losing even losing $20, let's say it's at 73, you would have lost $20 for every 100 shares that you have. You would have lost $2,000. So this is why we use options. So in this case, you lose $240 versus losing $2,000. Okay, so you're able to take more chances by using options, and that's why we do this, because we know this is risky business with these earnings plays. Then you had a bullish call spread on Kohl's. Long September 15th, 42.50, 47.50 call spread for $1.87. Max profit with Kohl's over 47.50. Kohl's had a great earnings report. They beat by 5 cents on EPS. They beat on revenues. Guidance was in line, I believe. And they were up almost 7% in pre-market. And now this spread is trading at 28 cents because Kohl's is at $38. They're just pummeling this thing, right? So this is what I say we do here with Kohl's. Cover the 47.50 short call because you can do it for like 5 cents and then await further instructions. Okay, so this way we're going to get the call, the short side out of the equation. We're going to have the 42.50 long call. My thinking here is already Kohl's starting to retrace a little bit of this move. If it continues to retrace, then we can either sell that call outright for some money, or we can sell like a 45 call, get some of that money back. So there's going to be a way that we're going to be able to manage this trade, and I'm pretty confident that we're going to be all right. Plus, we're all the way out to September, so expect to bounce as long as the market helps us too. You know, but the market's coming under some pressure. Now, I wanted to leave on a good note, right? So the good note is the bearish put spread that we had on Qualcomm. Long the August 18th, 55, 52.50 put spread for a 66-cent net debit. Max profit with Qualcomm under 62.50. The spread's at 194 right now with Qualcomm under 52.50. So you can rip this now for basically tripling up on your money. That's what I'm talking about, folks. That's why we do this. If we have one trade where we triple up, we can lose all our money on 2 other trades, and it's going to make up for it, right? But for the most part, it's very rare that we lose all of our money on a trade. So as long as we keep getting this reward when we're hitting, limiting our risk, in the long run, it's going to work out. And in the long run, so far it has. So just keep the faith. We're going to keep on rocking. We got this trade on NVIDIA. I've been a little bit more on the bearish side a little bit because of what the market's been doing. So we adapt, you know, shift gears in earnings season. And I know you guys see that. You can't just stick to a thesis and then earnings season starts going the other way and all these things keep on blowing up in your face. That would be silly. When you see the trends develop, that's when you got to adapt. So we are adapting, my friends. So that's all I got for you here on The Good, the Bad, and the Ugly. Join me tomorrow morning at 9 a.m. Central for the morning after NVIDIA earnings live Q&A. I'm sure that's going to be a great session. And I'm even going to have Brian Bolin on with me tomorrow. That's right, the Bolin Angel is going to be there. I don't know if I'll show his face. We might just hear his voice, but we'll see. So I want to thank you guys so much for hanging out with me here today on The Good, the Bad, and the Ugly, and I will see you all mañana. Have a good one.